Well, let's take Dominique Strauss-Kahn's comments to the experts. Ashraf Laidi joins us now from CMC Markets here in London. Ashraf, first up, what do you make of those comments, and where do we go from here?
Yeah, it's very interesting. You've got the IMF, you've got the ECB, and you've got the EU, and they're all coming into the mix, and all the traders are looking at them. What can they do for Greece? And this past 2 days, we saw some comforting words from the ECB saying the situation is not going to be that bad, saying that any downgrade is not going to be that harmful. But at the end of the day, look, it's this downtrend that we have been seeing in the euro, or the uptrend that we've been seeing in the US dollar, has been largely a focal point on the euro's negatives. It's very interesting. Back in the days when the dollar was falling against the euro, it was largely because people were overlooking the negatives of the euro and underlooking and focusing on the negatives of the US.
Ashraf, that just brings me to what the nub of the issue, which is sentiment, isn't it? And the belief that the euro is perhaps overvalued.
Yes, it is. And there is also the incentive for traders to want to take it back below the 140 level and towards the 138 level. Not only it's a sentiment driven from the euro point of view, but also from the situation that maybe the US dollar is oversold, and the fundamentals that we've been seeing, especially on the job front, has really been calling for the need to prop the dollar back up, and not only against the euro, but against even the Australian dollar, whose central bank may be nearing towards the end of the tightening in this current phase.
Now, do you think that the European Commission itself is perhaps weighing in and doing verbal intervention, for want of a better phrase here? I mean, comments from Joaquin Almunia saying the situation in Greece is having effects on other countries. That couldn't be clearer. They want to lower euro.
Exactly, not only from the EU, but also from the respective presidents or the leaders of the Eurozone. And we've heard something from the French president last year. They do want to bring down the euro, but basically they're doing their bit of what you call currency easing as opposed to monetary policy easing. And as for the ECB, definitely it is not going to be in a hurry to raise interest rates. That's the last thing it's going to do. And at the same time, people continue to look at those spread between the Greek and the German yields, which continue to tackle those lows that we saw, or those highs, the 278 basis points highs that we saw back in March of last year when the euro was around 128.
Ashraf, okay, 7 minutes before we get equity trading anyway beginning, what impact is the rally that we've been seeing having on these currency markets?
It's very much a dollar story. The technical signals are all over the place. The 200-day moving average in the euro has been broken yesterday, and the dollar index, for instance, is likely to push higher. Then we got this story here, whether rumor or not, that the Chinese are restricting bank credit. When you tie that into the equation with the expected reduction of a quantitative easing, when you hear higher than expected inflation in the UK is going to call for less and less need for more QE, that will basically likely to weigh on appetite to the benefit of the US dollar. We're still looking at 138 in the euro, still looking at around 153 in cable.
Yeah, and what about cable itself? Well, not cable. What about sterling itself? Comments coming from Mervyn King yesterday saying that Britain needs to get their house in order, in essence. From a fiscal perspective, it's most unlike him to be making comments like that.
Yes, he did say that. He also said that, hey guys, we were actually right in telling you that we're going to see a temporary spike in inflation, and we expect it to come back down. What he said is what the Fed is basically saying. We're going to keep interest rates low, and unemployment has still yet to push back up. The central banks are very good at saying one thing and trying to do something that is not totally different, but not going in one way. They don't want to forcefully say we are fully going to go into the exit strategy. But still, the bottom line, we cannot emphasize this more. This dollar rebound is more than just repatriation that we saw in December. It is here to stay at least into the middle of the first quarter. And I want to say something else also. There is a Davos meeting at the end of the month. That's going to coincide with the GDP growth in the US. So that's going to be good for the dollar.
Ashraf, we're out of time. Thanks so much for joining us. Ashraf Laidi from CMC Markets.